Welcome to Markets Now. I'm Michelle Rook with Tommy Grisafi, Advanced Trading, and we had some mixed market closes in both grain and livestock futures today. And Tommy, I want to start off with soybeans. We started the overnight session sharply lower, and I think that was kind of due to the Argentina elections, but then we ended sharply higher on the day. So was that South American weather again?
Absolutely on the South American weather. And corn did not want to participate. That was all beans. Beans took the lead from lower last night to higher. And then they really broke out. When the markets first opened today, we were all watching cattle and other things because there was so much information out there. Then all of a sudden, beans took the lead. At first, soybean oil was strong, Michelle, and meal was weak. If I'm
Right.
remembering right, when I looked at the end of the day, both soybean oil and soybean meal and soybeans were all on the highs. And corn said, heck with it. I might as well go up a few pennies too.
Yeah. So what do you think? Do we need to be adding even more South American weather premium to this market? I know we had some profit taking late in the week last week.
They I wonder who's caught short. I'm trying to sit here as a trader or broker and say who didn't prepare, who didn't get enough beans bought at harvest. Someone out there is caught short. If we rally enough, someone's going to lose their job. They don't have that type of panic in the corn. So my question is, with all these new plants coming online and with how much carry there is in the bean market, who's going to store these beans? I think these are attractive prices in beans. What farmer is going to store these beans, and how much is the marketplace going to pay you to store a bean till next July or August?
Yeah, we do have a lot of carry in the market. We didn't have that last year, did we?
Totally different scenario. We've been trading demand-led rallies where the front end is higher than the back end, and now we're going to what more of a market I'm familiar with, a carry market where you just look in every contract month ahead is a little bit higher than the other. Corn right now, like for example, December corn is going to come off the board pretty soon, but I think going home, D's corn was about 18 cents cheaper than March. D's corn trading around that 470 level, but then July corn trading 505. Incredible carry in corn, wheat, and beans. The market will pay you to store your grain. Of course, interest and payments on borrowing money are going to gobble up a lot of that. What it looks like to be a good carry, the cost of doing business is going to gobble that up, Michelle.
Yeah. So I want to kind of hone in on what you mentioned earlier. Corn was a very reluctant follower of this big double-digit rally in beans, meal, oil. Is that just because we have almost a 2.2 carry out, or is that, some of these extra bushels that are coming into the market yet because we had a little bit higher yields in some places than expected?
We have the bushels, and at some point, if beans put on $1, corn's going to put on a dime or 15 cents. I'm It's neat when the market rallies, but what happens I've noticed in the corn market is we have a pretty nice rally, a 10, 12-cent rally, and a few days later we give it all back. To put that to beans, when beans have a bad day, and the bean market did have some bad days just last week, when the beans have a bad day, watch out because a few days later they add that weather premium back on. I'm not so sure that corn's adding weather premium. Now, you talked to a lot of smart people. There is a thing, though, that's going to happen that if the soybean crop in South America goes in really late, then that's going to hold us back on the second crop, safrina, and
Right.
that could be what gives the spark to get corn to rally. But that's a lot of ifs, and that's several months away. But people who are bullish corn keep talking about, do you realize what this means for corn? And I'm sure you're hearing that from a lot of different analysts.
Absolutely. And the market has failed to move on it. So that's why I asked you why corn has been such a reluctant follower of beans. Maybe part of that is because wheat's been going the opposite direction and obviously has been an anchor for the corn market. What's wheat's problem? Is that all technical selling, or are we just still not competitive
In,
globally?
well, both. Interesting you mentioned the technical selling because the funds are really short wheat.
They are.
Yeah, Minneapolis wheat, I think, has a record short. I want to say, no, they don't trade a lot of wheat over there for sure, but about 28,000 contracts short, maybe 29 now. So a record short in some of the wheat complex. And you think they're going to get hurt doing that, yet we make contract lows. So when I watch the markets, I have soybeans on my left, corn in the middle, wheat on the right. And I watch soybeans go up and I want to get excited and buy corn. Then I look over at wheat and see all three contracts making contract lows. And that really stops me from taking my hand
Right.
and buying too much corn.
Cattle market. So we had, a fairly constructive cattle and feed report. Placements number was at 104. So we start out of the gate this morning with a gap higher opening, but then nearby contracts and lower. So kind of a disappointment here, wasn't it?
Big disappointment. Right off the bat, one of the feeder contracts I was watching traded up 400 or almost up 400. And I'm thinking about looking at what's limit up. And then quietly it backed off. And once it backed off and the live cattle started to make lows in the day, I think people who maybe had an aggressive long or were hoping for a flip, I felt like a little panic buying on the open. Then we made new lows. We've settled okay. Going home, no disasters happened. But if you're a long-term bull in the cattle market, you're going to need some more days like today to build that base, and hopefully this market recovers. I'm not, I don't have to write anyone a check if it doesn't recover. I didn't say it's going to recover, but for the long-term bull market structure of the cattle, we're going to need more days like today where we build a bottom, build a base, and start to work out of it.
Do you think the funds use the strength today, though, to get out of more of their longs?
Michelle, it happened so fast. I don't even think they had time. I mean, I watched it, and it's not as deep and liquid and robust as a market as corn. I mean, you could place an order to buy 1,000 corn and barely move the market. 1,000 cattle would move the market tremendously, and we've seen big orders hit it on both the buy side and the sell side. The cattle market is not as liquid as it used to be, in my opinion. I kind of miss the pits, but those aren't ever coming back.
Yeah, no doubt. Let's talk about some of these outside markets. The equities have had a nice run now. Crude oil has been interesting to watch as well. So let's pick on that one because last Thursday, a lot of people were saying, hey, this thing is turning into a bear market. Then we have a big rally on Friday and a big rally today. So what's going on?
Thursday's move, I actually sent a text out to clients saying, hey, call the fuel guy. You don't need to go buy futures or options or anything, but buy the physical. And I just thought it was a good value. I know we can go lower. Well, I doubt many people called that fast. And here we are. Friday, we put on 3/4 that move. And then today, we eclipsed that move. Extreme volatility. I know things aren't getting better on the Middle East. Seeing a lot of protests here in the United States, whether it be protest on the Capitol, protest in Chicago. I know Lakeshore Drive was shut down. A lot of tension when it comes to what's happening in Israel, when it comes to Gaza Strip, and of course, the Ukraine-Russia war is still going on. So the world didn't become any more peaceful as we end 2023.
And what about, other outside markets like the equity sectors? I mentioned that has rallied now and the dollar's been going down. And some of that is really this belief that the Fed is done with interest rate hikes and that we're going to start going the opposite direction now.
That is true. The 10-year yield went from 5.05 all the way down to 4.45. The markets have priced in 2/4 point rate cuts. People think that would happen next June or July. Now, the Fed did not say it's going to cut rates 2/4%, but the market said, heck with it, it's futures market, and they just jumped ahead of it. And that signal to the market really has stocks on a roll. The stock market, so many people bet that something bad was going to happen. And we've had some sell-offs, but nothing too major. Matter of fact, last week we had some big updates in that stock market, just as you're saying, on CPI, PPI news that inflation is calming down and that the job of the Fed was to get it calm, and they did. And it looks like if we slow down the economy enough, that they'll actually start cutting rates. Time will tell.
Yeah. Lots of interesting discussion today. As always, Tommy Grisafi with Advanced Trading. That is Markets Now.